Thank you all for tuning in. Now, I can't promise you the outcome that you're gonna get from watching this, but what I can tell you, if you apply what you're about to learn, this will change your financial future. If you're here, it's probably because you're ready for change. And what you're gonna learn in tonight's training will do just that. So if taking back control of your money isn't enough to keep you glued to this screen for the next 90 minutes, I think it's time to reassess your priorities. And tonight, we've got a special guest. My good friend Brian is gonna be doing the training, and here's what you can expect to learn. Number one, you're gonna learn how to take back control of your money. And you're gonna do that by learning how to be the bank. Number two, you're gonna learn how to build wealth through your own debts and expenses. And you can do that without working harder, without working longer, and without taking on any additional risk. And number three, you're gonna learn how to get all the money back for every single car you will ever buy, drive, and own. That's exactly what you're gonna learn in tonight's training, so get ready, get set, let's go.
Take back control.
Tuesday night.
Tuesday?
Hey, welcome to Take Back Control Tuesdays, where we are going to teach you to become your own bank, take back control of your money, and solve your money problems. So super excited for today. On behalf of Chris Naugle, the BYOB Money School, and the Money Multiplier, wanted to welcome everybody. My name's Stephen Nagy. I'll be kind of the host of today's show. In the background, I'll be on the chat, answering questions as they pop up and things like that. And my role is I manage our entire brokerage, our entire agency for all of our BYOB, what we call our money mentors. And our money mentors are professionals that implemented the infinite banking concept and becoming your own banker into their lives, have become financially independent and successful, and now are able to share their experience and what they do with others. And that's exactly what we're going to do here with you today. So for those of you that are ready, I'm super excited because Brian Fouts, who is going to be presenting today, comes from a background that's really kind of different and interesting, and in my eyes, really cool. And I'm not going to share that. I'm going to let him tell you a little bit more about his background. But long story short, for probably the last, 7, 8, 9, maybe even 10 years, I've got emails from Brian, marketing emails, and he's ran several different financial educational companies at a very high level and has helped thousands of people over the years. So I've just always gotten his emails because I follow other fellow financial professionals, in this space. And Brian was one of them. And just last year, Brian and myself were connected on the phone, and we started talking and realized this is like a match made in heaven, doing what he's been doing for many years and combining it with what we do here with the Chris Naugle Agency and the BYOB Money School and Money Multiplier. So Brian said, you know what, let's team up, let's partner up, and let's all do better together. So super excited to have Brian present, because I've actually never watched this presentation Brian deliver it before. And one of the things that is really cool about these new Tuesday webinars, which by the way, we're doing this every single Tuesday. So come back next Tuesday, the following Tuesday, and you can hear maybe a different presenter. Brian will be here, Jason will be here, I'll be here, Carson will be here, Brent will be here, Hannah will be here. We'll have different presenters, because one thing I've learned about becoming your own banker is it means something a little bit different to everybody. And I've learned things from different money mentors, from my mentors, Chris and Brent, and everybody brings a little something different to the equation. So what we decided with this Tuesday show, let's just hear from other people that are doing this for many years, are very successful at it, and let's hear how they like talking about it and introducing new people to it. So that's exactly what we're going to get into today. So Brian, I'll leave it to you to find out who here is brand new, who here is already doing some banking in their lives, who here is ready to take it to the next level. But with that being said, we're going to have a little bit of something for everybody here today. So put your questions in the Q&A as we go, chat in the chat box, interact, have some fun with us. With that said, Mr. Brian Fouts, I'm going to turn it over to you. Thank you, man, for being here. Thank you for being part of the Money Multiplier. And today's going to be a lot of fun.
Absolutely, man, and appreciate it as well. Thanks, Mr. Stephen Nagy right there. All right, everybody, I'm Brian Fouts, and yes, let's get into it. So here's something I learned on my own journey, and I want to share this before we jump into it, because this is something that I don't think a lot of people understand or think about, and that's control. What's this presentation called, or what's it called? It's, Take Back Control Tuesday. Control is one of those things that in life, if we're not aware of it, someone else is going to control us. So there's three things I look at that we want to control in our lives. And there's more, of course, but these are three main things. Now, if you guys have some ideas of what those are, go ahead and put them in the chat box, but I'll just explain what these three things are to me. First one is time. Time is that one resource that once it's gone, it's not coming back. So that is one of our most valuable assets that we want to control in our lives. The second one is our mind, our mindset, because that is the one thing that we can literally control. But if we don't, somebody else is going to control it for us. So your mind is something you want to always control. The last one, of course, is money. Money is something that we all want to control. Now, when you think of those three things, which one do you want to address first if you're trying to change something in your life? Is it time? Is it money? Or is it your mind? Well, in my opinion, it's your mind, because if you don't control your mind, you can't control money. And if you can't control money, you can't control time. So as we go through this presentation, we're going to talk about controlling our mindset around money so that when we do talk about infinite banking, it does make sense. But we got to focus on that first. So that being said, by the way, does that make sense to everybody? Give me a one in the chat box, guys. Does that make sense? I mean, do you guys want to control your time, your life, your mind, and your money? I mean, if you do, hopefully we all want to control those things in our lives. Put a one in that chat box right there. Well, I'm sure you guys are actually hearing what I'm saying. So go ahead and put a one in that chat box. Now, as we get into these topics, what we're going to be talking about is a very powerful wealth building strategy that can change your complete financial future. Love all the ones in the chat box, by the way, guys. Appreciate that. So when you understand how the wealthy control their wealth, control their money, you can do the same thing as them. And you can keep all that money that we're making today in our families, in our lives, because when you have the kind of control, you can do the same thing as the wealthy. So we're going to go ahead and dive into this. All right. Now, before we get into it, though, I want to share this quote that we here at the Money Multiplier really like this quote. And it's from Will Rogers. And it says, "The problem in America isn't so much what people don't know. It's what people think they know that just ain't so." Very powerful. So why do we like that quote right there? Because here's the thing. A lot of us have been taught a certain way to think about money, or been taught something about money or how it works that just is not true. It's not true. So why do I say that? Because I want you to keep an open mind as we go through this presentation, because I'm going to be challenging the way that you think about money, the way that you've been taught about money, because oftentimes it's just not true. Okay. I want you to think about this. Now, this is something that really, when I heard this quote and I saw the stats, it sort of kind of scared me a little bit. And so let's imagine you have 100 18-year-old kids gathered in a room, and you ask every single one of them, "Hey, where are you going to be when you retire? Like, what are you going to be financially?" What do you think they're going to say? "I'm going to be broke," or they're going to be wildly successful? They're going to be millionaires. Of course, they're going to all say they're going to be very successful. But here's the thing. If you fast forward to when they are retired, the fact of the matter is that only 5% of those 100 kids are going to be financially secure by that time of retirement age. That's insane, because think about where we live. Now, we're in North America, right? One of the wealthiest countries in the world. How is it that only 5 out of 100 people are going to be financially secure by the time of retirement when we have all of these resources around us? Okay, that's crazy. Now, let me ask you a question. Do you want to be one of those 5 people? Like, give me a one in the chat box. Give me a one, or a Y, or a yes. Like, do you want to be one of those 5%, those 5 people that are successful or financially free in retirement? I know that I want to be one of those 5. I know, yeah, there you go. You guys want to be the same thing too. But here's what's really really crazy. That stat comes from the Social Security Administration. Like, this is an actual statistic. And it's 5 out of 100 people will be financially secure at retirement. That is kind of scary. Now, before we go into this, I want to share a little bit about my background. I'm not going to spend a lot of time on this, but I did go through the traditional path in life when I got my start, right? That's my degree right there from Washington State University. Go Cougs, if you know what that is. But I got a degree in construction management. I have not used that degree in probably over 10 years, but that's how I got my start. That's what I was told that I had to do to make money. And I call that the hard way. Why do I say that? Well, I was raised lower income. I remember, having to, start the fire in the morning to get warm because we didn't have any heat other than a wood stove. But I was told to follow that traditional path through life. Go to school, try to get good grades, right? Go to college, save into a 401k, right? I was doing all of those things. I had a house at this point in time. I had a growing family. I was in my early 30s. And I had that American dream, the white picket fence, all that kind of stuff. But I'll tell you this, it didn't feel like a great dream. It kind of felt like a little bit of a financial nightmare. It really did, because I was in massive debt. And I read this article in this financial magazine one time, and it said that the average millionaire knows their net worth, but the average middle class person doesn't. And I'm like, whoa, who am I then? I don't know my net worth. And so I went and did the math. That's the actual piece of paper I did. This is many, many years ago now. I was worth a negative amount of money. And I said, wait a second, I've been working for over a decade and I'm worth a negative amount of money. Like, that made no sense to me. I did the math the next 5 years and it just got worse. I was like, this can't work. So I thought I would go on a journey to change. And that's actually what happened, because I was fed up, and I was also a little like, this can't work. And then something happened. So my grandfather, my idol, man, I love that guy. Worked really hard, had a very big reputation in the town that we lived in. Worked a long time, and then retired to go live the good life, right? So he had all these plans in retirement, but not even a year after retirement, he got sick. He had Parkinson's, leukemia, and ended up passing away, and never got to live that life in retirement. So I told myself, I don't want to be that same story. I want to go do something different. So that's what kicked off my journey. And long story short, I got into real estate. I got into other things. This is one business that I acquired many years ago. This is actually 2016 when it was started. This tax return is from 2021. Did over a couple $1 million in revenue in that one business. This is actually during COVID, by the way. That business actually made the Inc. 5000 list actually in that year. So I changed my life. I literally changed who I was around, and I changed my mindset so that I got control of my time, my mind, and my money. And so I've done a lot of cool things in life. I am more about experiences, by the way. I love to have experiences in life. It's not for me, it's not the money, it's the experiences. But I've done a lot of fun things that I never could have dreamed of if I hadn't made that shift, made that shift in my mind, and got control of my life. And this has led me to doing a lot of things. I've been able to speak at a lot of events, present on infinite banking, by the way, we're going to be talking about here, and shared this with thousands and thousands of people, and changed a lot of people's lives. So that's why I'm here today as well, because this is my passion, is teaching this kind of stuff. Now, let's dive into this concept. Now, this concept, infinite banking, is not a new concept, by the way. It's been around for a long time. In fact, you probably heard of Robert Kiyosaki. By the way, I work with a lot of his advisors, his personal advisors. That's where I learned about this, by the way, was from some of his advisors that I work with. But he talks about it in his book, Second Chance. Great book, by the way. Tony Robbins mentions it in Money Master the Game. That's a great one. Then, of course, there is Becoming Your Own Banker by R. Nelson Nash. This is kind of like the person that kicked this whole thing off and made it very popular back in the day, many decades ago. Also, this is by Brent Kessler and Chris Naugle, whom we work with, of course. They wrote this book, Mapping Out the Millionaire Mystery. I would recommend all of these books, by the way. And then, of course, Chris wrote this one, The Private Money Guide, as well. So if you want to level up knowledge, get knowledge. That's why you're here, right? These are some great books as well to keep that knowledge going for you. All right, now I want to talk about what infinite banking will do for you really quickly, because this is one of those things that people hear about it, but they don't understand what it can do for you. So I want to make sure we hit on this really quickly so that you understand why we're talking about this. So it creates guaranteed generational wealth day one. Let me ask you guys a question. Do you want to have generational wealth guaranteed, by the way, tax-free day one? Give me one in the chat box if that is something you want in your life. Because I didn't know that was possible, but with infinite banking, it is possible. Day one, not year 40 or year 30, but day one. It allows your money to grow uninterrupted, compounded for the rest of your life with guarantees. I like guarantees in life, by the way. In a lot of things in life, there are no guarantees. So the more we can have, the better we can live. So I love having guarantees, and this is one of those. It also allows you to take control of your money away. Take the control away from the big banks and Wall Street, and puts the control in your hands. Now, here's the thing. Do you think the IRS has your best interest at heart? Do you think Wall Street wants you to, be wildly successful, or do they want them to be successful, right? So I like having control of my money and my future. It protects your money from lawsuits, bankruptcies, divorce, and creditors, not credit, but creditors in most states. So for me, I want to protect my money. I want to protect my family's money and my future family's money. So that's why I love this concept and this strategy. But it allows you to be the bank for things that you may normally use a bank for. These are things such as real estate investing, college, cars, homes, investments, retirement, while still having all of the benefits listed above. So what I want you to understand with infinite banking, it's not just one or two of these benefits you get with this concept. It's all of them at the same time. Like, I don't know of any other process or concept or strategy that does all of these things at the same time. So I want to make sure that we make that point right there. All right, guys. Additionally, take notes. If you have a pen and paper, take notes. Use the chat box to take notes or ask questions. Use the question box. Use those things because we have people here that can answer your questions. All right, now I want to talk a little bit about mindset. Now, this is a really funny video, and I'll get into it in a moment, but who learns quickly in life? Well, kids. Kids learn very fast. So think about a bicycle. Now, when you were little, you learned how to ride a bike. You probably fell down a few times, but once you learned how to do it, you could hop on a bike and go. And let's say it's been, 5, 10 years since you rode a bike, but guess what? You can probably hop on that bike and learn to ride it very quickly. Probably take you 1 or 2 times and you're off to the races again. Because it's pretty simple, right? You turn to the right, it goes right. You turn to the left, it goes left. But here's the thing. What would happen if the bike did not work that way anymore? What would happen if you turned the handlebars to the left and the bike went to the right? This is called the backwards bicycle. Go look it up after the presentation, by the way, not right now, but go Google backwards bicycle and watch the video. It is hilarious. But that bike does that. It took the gentleman who was in the video that I saw about 6 to 7 months to learn how to ride this bicycle, okay? But here's the crazy thing. Once he learned how to ride this bicycle, he went to hop on a regular bicycle and he couldn't ride that one anymore. Like, he couldn't ride the regular one anymore because he learned how to ride this one. Why do we mention this? Because this is the same concept with money. We are taught or we learn a certain way about money. But guess what? It's not correct potentially. And so what we're going to be talking about with infinite banking is learning a different way to ride the bicycle or a different way money can work for you. And once you learn this new way, it's going to be very, very hard to go back to the old way. Okay. And so what we're going to be talking about is where your money goes first. That's really what we're talking about, because money comes in, money goes out. But where it comes in first, when you bring it in, is very important. Okay, now I want to talk really quickly about why more people are not successful in life. Now, this is what we call the mysteries of money, but here's why people are not successful when they think they should be. These are the wealth killers. So taxes. I don't mind paying taxes, but I'm happier paying a lot less, by the way. So taxes, though, steals wealth. Inflation. Inflating of the money supply steals wealth. Volatility, interest, all of these things just take money away from you. Additionally, mindset. Following the status quo. Fear, by the way, is a huge thing that steals wealth. Life, right? Life in general, if we go through life, we learn certain things, we don't get proactive about what we're doing with our money, you're going to lose money, okay? And then obviously what we're taught. What we're taught may not be true. And so right now we're going to be teaching you something that is amazing, that can change the way that you look at money, but also change the control you have around that money. So let's talk about some of the other mysteries of money. So what is the definition of money? So it's just, by the way, it's just a means for exchange. That's all it is. Okay. It's just a means of exchange. What company, by the way, uses compound interest? Now, do banks use compound interest? No, they don't. They charge you interest, but they don't use it themselves, right? They make money with compound, but they don't use it per se. And so, like, why do we say this? If you wrote your name on a $20 bill and gave it to the teller at the bank, would they put that in a box with your name on it? No, that money goes into motion because they want that money making money for them. Are your dollars worth more today or in the future? Like, this is what I want you to think about for a second. Is your money worth more today or more in the future? Think about it this way. How many candy bars could you buy with a $20 bill years ago versus today? A lot. You could buy, probably 40 of them years ago. Today, maybe you can buy 5, okay, as an example. So your money is worth more today than it is going to be in the future. So use it today. Well, taxes go up or down. I mean, obviously we know that taxes are always going to go up. They're not typically going to go down. And as we go through life and as we get into retirement, typically we're paying more in taxes because we have less deductions. Now, here's the thing. When you think about the future value of money and if taxes are going to go up or down, think of a 401k. Now, with a 401k, what you're doing essentially is giving up dollars today for weaker dollars in the future. Does that make sense? So you're giving up dollars today for weaker dollars down the road. And you're compounding the tax, by the way, because tax is always going to be there and typically is going to go up. Okay. Now, this is an interesting question. Would you want to wait to eat bread or drink milk? The answer is no, of course not, right? You don't want to wait for that kind of stuff. You want to have it now. Because here's the thing. Let's say if you go to the store and you buy a loaf of bread and you put it in the freezer for 20 years. When you go to use the bread, maybe you, instead of having one loaf of bread, you now have 2 loaves of bread, but they're still both freezer burnt and taste like crap. Okay. But here's the thing. When you first bought that first loaf of bread, you could have used it then as well and have it for down the road at the same time. And then what do you know about your retirement account? This is the one that I didn't ever think about it when I was first getting started. I really did not think about it. So let's talk about really quickly your retirement account. Who controls the money in your retirement account? Is it you? Typically, no, it's not, by the way. It's the bank, it's the 401k provider, it's Wall Street. Now, also, are there guarantees that you'll make money in your retirement account? No, because you're the one taking all the risk, by the way. It's not Wall Street, it's not the banks, it's not the 401k provider. It's you taking the risk with your dollars and you're making them money at the same time. It makes no sense, right? It's almost criminal when you look at it, but if you don't have a choice, this is what people turn to, right? Okay. And you can also lose your money in these retirement accounts. So, by the way, I know that I just threw kind of a lot at you, but I want you to start seriously thinking about what you do with your money. That's why we're going through this. Think about what you do with your money, because up until this point in life, you've just been taught to accept the traditional way of thinking about money. But to truly build generational wealth, by the way, generational wealth, you need to challenge the way that you think about money and those old concepts and look at how other people, the wealthy, by the way, do things differently. Okay, so let's go ahead and dive into how infinite banking works. So let's say that you have a car, or you want to buy a car, and let's say you buy the car for $25,000. Now, by the way, don't get hung up on the price of the car. Ferrari versus a Focus, same thing, right? So let's assume though that you have your money in a bank, a local bank, okay? And let's say that, and I'll play your banker, by the way, I'll be banker Brian. And let's say that you have $25,000 in that bank and it's making you, let's just use 4% right now. So it's making you 4%. Now that sounds pretty cool. Okay, I'm making 4% with my money. Now you go to the bank and you come to me and you say, hey, Brian, I want to take out $25,000 from the bank. Okay. By the way, it's earning 4% in that bank right there, but I want to take that cash out and buy that car. And I say, no, don't do that. Instead, here's what I'm going to do for you. I am going to give you a loan for $25,000 at 6% interest. And I'll use your bank account, the $25,000, as collateral for that 5-year note. Okay. So I'm going to give you a loan for $25,000 at 6%. Okay. So there it is right there. So you have $25,000 in the bank earning 4% for 60 months, 5 years, and you now have a note to buy the car at 6% for 60 months. Does that make sense? Now let me ask you a question. Are you going to earn more money doing this or taking the money out of the bank and paying cash for that car? I'm going to show you that you're going to earn more at 4% while paying 6%. Yeah, Greg said it right there. 4% is best. Why? Well, here's how that works. So your monthly payment on the car note at 6% is $483.32 per month. Okay, that makes sense? The future value of what you're going to pay back is $28,999. Okay, now here's the crazy thing. The future value of your money earning 4% is $30,525. You have essentially made a spread. You have made $1,526, and you also have the car and you have the money in the bank and you've made money. That makes sense? And by the way, it could be 3 years, it could be 10 years, doesn't really matter. What I want you to understand here is that when you're earning compound on money and paying simple, which is the car note, you're going to be money ahead. You're going to make more at 4% than paying 6%. Now, why is that? Why does the math work that way? It's because the car note, you're paying 6% on a smaller balance every month. In the bank, you're earning 4% on a larger balance every month. So the car balance is going down, while the money in the bank is going up. That's why. So our minds, by the way, are not trained to think that way about it. We're trained to think about, oh, 4% sounds like if I'm paying 4%, that's better because I'm paying less. We don't think about the payments. We don't think about the money we're going to spend or earn over time. That's why this is so powerful. So I want you to start thinking about money a little bit differently. You can make more at 4% than you can paying 6%. All right, so let's go ahead and talk about the money multiplier method. Okay, so the first part of this is the machine. So we're going to talk about what that machine is. Then we're going to talk about that this is a marathon. It is not a sprint. This is a marathon because we're going to keep this money moving and earning for us over the life or over our lifetime. Okay, so we want to talk about that. Then we're going to talk about the millionaire. How do we use this concept, infinite banking concept, to essentially become the millionaire? Now, it's not get rich overnight, by the way, because if that's what you want to do, you want that easy button. This is probably not a fit for you, by the way, but we're going to talk about these 3 things next. Okay, let's jump into the machine. So really, it's pretty simple, guys. All this is a dividend paying permanent whole life insurance policy from a mutual company. And it's a specially designed whole life insurance policy. Okay. Now you might be thinking, why in the world would we use life insurance? Because I remember when I first learned this kind of stuff, I was always thinking like, well, I don't need life insurance. I'm healthy, etc. I don't need this in my life right now. But here's the thing. When you look at what wealthy people do with these things, they're not looking at it as life insurance. They're looking at it as how do they build wealth and become the bank, okay? Because the life insurance is just the engine that drives the car. The car is infinite banking, okay? Here's something to think about. If you're thinking, well, man, life insurance doesn't make sense. Well, guess who the biggest buyers of insurance, whole life insurance is? It's banks, big banks. So big banks own more whole life insurance cash value policies than they do their land or real estate and buildings combined. So by the way, you can go Google this. It's called BOLI, B-O-L-I, or bank owned life insurance, and you can see what they own. So do they know something that maybe we don't? Probably, right? And so here's what we're talking about doing the same thing the banks do, because they're taking your money and they're putting it into these vehicles, whole life insurance. So we're going to do the same thing the banks are doing, by the way, essentially. So why do we do this? Why whole life insurance policies? Well, guess what? This concept, infinite banking and whole life insurance, has been around longer than the IRS. It's been around longer than the tax code, which is 1913, by the way. It's been around since the 1700s. Okay. It also has guaranteed growth of your money. It's safe. There has not been a contract default on insurance, mutual companies in the US in over 300 years. There has not been any defaults of these. Now, think about that compared to a bank. Have banks got under? Absolutely. By the way, in the Great Depression, 9,000 banks went under. Gone. How many insurance companies went under? 0. In fact, 2% of their assets were impaired. And they paid profits or dividends to their policyholders during the Great Depression, World War I, World War II, COVID, etc. So where would you rather have your money, right? Okay. So how does your money flow? So this is a great question. We already answered this one. Can you make money earning 4% while paying 6%? Well, we already showed you that you can do that, right? We showed the car example, $25,000 car. We showed the bank, $25,000 at 4%, 60 months. We showed you that you can make more money at earning 4% while still paying a higher rate, 6%, okay? So here's the interesting thing about this scenario. This is really what I want you to understand here. When you look at infinite banking and doing this same exact example, you're in control of everything you see on the screen. You're in control of the bank. You're in control of the car note. You control everything, okay? Who here wants to be in control? Well, we've already answered that question. We all want to be in control. So when you look at this example here, what happens when you are in control of everything? You build wealth. That's what happens. So let's think about how banks work, because when you look at how banks work, all of a sudden you don't want to have your money there anymore. That's what typically happens when you start to understand how they function and what they're doing. It's almost criminal, by the way. So let's use this example. Let's say you take $100,000 and you put it into the bank and they're going to pay you 4%. I know that's probably a pretty good rate. You might be getting 5%, maybe 4%, not guaranteed, by the way, but let's say you're doing that. But here's what the bank does. Does the bank sit on your money? No, they don't. What do? Well, they're going to lend it back out at 7% maybe for a home. Okay. But here's what happens. Well, when you go buy a home and that money goes to the seller, what do they do with it? Well, they put it right back in the bank again. What's the bank do? They turn around and lend it back out again. Maybe it's a car note at 8%. Well, guess what? Does the car dealer take that money and just sit on it? Absolutely not. They put it right back into the bank. What's the bank do? Same thing. They lend it back out again at 9%, maybe for a home remodel, maybe a HELOC. Contractor gets paid, pays his people. Where's that money go? Back into the bank. Comes right back out. Maybe it's debt consolidation. Okay. Credit cards. Credit card companies, guess what? They use banks. It goes right back into the bank again. So all the bank is doing is moving money. It's constantly in motion. Constantly in motion. Their money's in motion. You park your money in the bank, right? And you do nothing with it. It just sits there in your savings account. But the bank doesn't sit there. They lend it out. They make money. So someone asks, how are they paying you 4%? Well, look at where they're making money. They're making money everywhere. They can pay you easily 4%. That's not a problem because they're making so much more money off of your money. That's how they do this. And in fact, if you do the math, I'm not going to get into all the math here, but they're essentially, they're making over 500% more than they're paying you. So they're paying you maybe 4%. They're making 20% or more off of your money. They're making money left and right. And also think about this. How much risk is the bank taking? It's your money, for crying out loud. So they're not taking the risk because it's not their money. They're making money off of other people's money. That's how banks exist. Now, let me ask you a question though. Why do banks exist? And I already gave it away, but why do banks exist? And so oftentimes when I ask that question, people will say, well, they exist because they want to loan money. They're lend money. It's a place for us to store our money. Banks exist to make money, to be profitable. That's why they do it. That's why they exist. They want to make money, right? And they do that by taking your money and putting it to work. And so all we're saying is do the same thing. Do the same thing. Put your money to work, put it into motion so you can make money off of your money. Now, this is a crazy stat. Go to BauerFinancial.com and pull up any bank that you want. Get their annual report from any year, this year, last year, 20 years ago, doesn't really matter. And that report will show you how much banks actually make on the money that you leave there. I don't think there's any bank that has made less than 400% annually on your money. So that's why when you go into a bank, they have the nicest buildings on the corners. We are essentially paying for that. And then it's kind of funny, and we all kind of talk about this in the Money Multiplier, but if you go to a bank, and I took a picture of it actually and sent it to our team here a month or so ago. I was in a bank and there was that little container of lollipops or popsicles next to the teller. And it was Dum-Dums. And I took a picture of it because I thought it was so funny. It's like I felt like I'm a dum-dum sitting here putting my money into this bank, but I had to cash out a check. But it was just funny seeing that there. Now, the other thing to keep in mind is that when you go use a bank, like they're in control. You're asking them for money, asking them for permission. They're going to look at you and say, well, do I want to give you money? Well, guess what? When you are your own bank, you can do whatever you want. You don't have to ask permission. It's your money. Now, I want to talk about the annual pattern of spending. Now, this is something that, in recent years, it may have changed a little bit, but where your money goes, where your money is flowing out of your hands and into somebody else's hands is extremely important. So as an example, let's look at it this way. Approximately 20 cents of every dollar that you make is spent on automobiles, cars. So payments for the car loan, gas, upkeep, tires, things like that. Then 30 cents of every dollar that you make is spent on housing. So rent, mortgage, things like that, okay? 40% of every dollar is for everything else, travel, entertainment, food, things like that, okay? And then guess what? 10% it goes to savings, okay? 10% goes to savings. So 90 cents of every dollar that you make goes to other people. Makes them money, by the way. And this is as of about, maybe it's about, I think it was about maybe 24 months ago, the average savings rate in the US actually is less. It's actually about 5 or 6% now instead of 10%. So it's actually going the other direction. And prior to the recession, the current one we're kind of in, if you want to call it, before COVID, savings was a negative number, by the way. And so here's the thing. When you go to a financial advisor, they're going to talk to you about the money that you're saving, that 10%. That's what they're going to talk to you about. And they're going to say, hey, Brian, hey, Tiana, hey, Efrain. So to get a higher rate on what you're saving, let's go do some more risky investments. Now, I got to be honest with you. I don't want to take any more risk with my money because I have seen what risk does to my money, right? If I'm not in control of it and I'm taking risk, the chance of me losing money is even greater. So I'm not going to talk to you about what you're saving, okay? That's not really the purpose here, but rather what you're spending. I want to take some of what the money that you're spending and move it into your savings category without changing your cash flow, without losing control of your money, or without taking on any more risk. Okay. Does that make sense? Sound good? All right. So let's talk about that. So what would happen if you moved the interest that you're paying into your savings? So here's the thing. On average, I said people spend 20 cents of every dollar they earn on their cars. Okay. Now here's the thing. 5 cents of that 20 cents is interest. Okay. So of the 20 cents you spend on cars, 5 cents is interest. Let's move that 5% into your savings. Okay. Make sense? Okay. Now, 30 cents of every dollar that you have is spent on housing. Now, here's the thing that is really kind of scary. 25 cents of that 30 cents is in interest. Now, why is that? Okay, let's go ahead and move, by the way, let's move that 25 cents of the 30 over into the savings category. Now, why am I saying 25 cents of the 30 is interest? Well, when you look at, like, let's say a mortgage, when you look at your statement, the first 7 years of your payments, around 80% of your payments is going to interest. So a 30-year fixed mortgage is one of the most misunderstood financial instruments out there. It steals wealth away, and it is crazy how it works. And by the way, if you want to pay a lot less to your home, let us know. We can show you how to do that. But that's crazy right there. Okay. Now let's move on to everything else. Now everything else, around maybe 5% of that goes to interest. So let's go ahead and move that over into savings as well. Okay. So now what have we done? We have essentially recaptured the money or the interest that was originally going out to other people, banks, credit card companies, car companies, all that. We've moved it into our own hands and our own control because we are being the bank. Okay. Now, by the way, who here, give me a 1 in the chat box. Would you guys like to take the money that you're giving to other people and put it into your hands? Would that be something you'd want to do? If so, give me a 1 or a Y or something in there, right? Yeah. There you go. Yep. So that's what we're talking about. That's what infinite banking can do for you. And when you start to see the math, it definitely changes the way you think about banks and how they're handling your money.
You ever feel like you don't have control of your real estate business or your money? That's right. The big banks and the institutions, they're in control, right? I know you've felt that before. Private Money Club puts you back in the driver's seat. As members often tell us, it's a total game changer. Join the community of like-minded lenders and borrowers by going to privatemoneyclub.com and sign up.
So next I want to show you how you can get back all of the interest for all the cars you'll ever own for the rest of your life. Because when you think about cars, lots of people they'll every 5 years, a new car note, a new car loan. That money is just constantly going out and you get no value other than you can drive a car. There's no future value for that money for you. So we want to show you how to get back control of that money into your hands. So let's look at the machine. Okay, this is the machine. Now I want to change your mindsets around the machine. So when we look at life insurance as an example, we hear the word premiums and we think, well, that's a bill or that is an expense, right? So if it's home insurance, car insurance, those are an expense because the only value you get is if something bad happens, right? Which we don't want that to happen. So it's purely an expense. Now, when you have a whole life insurance policy, specially designed, by the way, when it's designed correctly, we look at the premiums as a deposit. So I want you to think about this. When you deposit money in the bank, you can go use the money right away because it's liquid, right? And I've never met one person that does not want to deposit more money in their bank because when you do that, you have more access to cash. Your infinite banking is the same thing. When you deposit money into the bank, you have access to cash value or liquidity, okay? Now, keep in mind, this is when the policy is structured correctly. It's exactly that. It's a deposit. So as we move through the rest of the presentation, I want you to start changing the way you think about the premiums, their deposits or premium deposits. Make sense? Because when you put this money in and you can pull it back out, it's not an expense. Additionally, age. This is a big one. I want you guys to think about age as it doesn't matter when it comes to infinite banking. I have clients that are 18 years old. I have a client yesterday that was 72 years old. And I have one that was in their late 70s. Okay. So the only thing that technically does matter is that the older you are, the less time you have to live with all the things we're talking about, and your money has less time to grow. That makes sense? So that's the main difference. And so what happens is the older you are, the death benefit, or what we call the generational wealth aspect of infinite banking, is not going to be as high. Now, we don't really talk about death benefit because death benefit is not the focus of infinite banking. If someone is trying to sell you high commission, pure insurance policies, they're going to talk about death benefit. So if you go to somebody and say, hey, set me up with infinite banking, and they say, okay, great. How much death benefit do you want? Run away. Go the other direction, because that is not infinite banking. I will never ask you, oh, okay, great. How much death benefit do you want? That's not the start of the conversation, because we want to talk about how we're going to be funding these and how we're going to use it. Okay. Let's go ahead and look at this example. So let's look at how the machine works by seeing an example of how you can reclaim interest on your next car. Okay, so this is pretty cool. So I'm going to go through this. I'm going to try to slow it down a little bit. If you guys can't tell, I get pretty excited. I talk kind of fast. So I'm going to try to slow it down a little bit here so we can walk through the math a little bit. Okay, so let's say we have a policy in place, and we are going to put premium deposits into the policy, $10,000 per year for 7 years. Okay, now let's say at year three, you're going to buy a car for approximately $25,000. Okay, so you borrow from your policy and you buy that car. Okay, then you pay that car back at $6,000 per year. That's $500 per month with interest, by the way. You pay that car back, or pay that loan back, okay, to your policy. So here's how the math works. You put in $70,000 in premium deposits. You put in $30,000 in loan payments back to your bank. Okay, but what did you also have? Well, you had $25,000 in cash. Okay, now you wouldn't spend that cash and bought a car with it. Okay, but you had $25,000 of cash. So you had that value in your hands. So how much did you truly put into your infinite banking policy? $75,000. That makes sense? Okay. Now, here's the thing. While you've been using your bank, okay, well, this concept, the cash value of your policy, the cash that you put into it, the $70,000 there, has been growing as well because it's earning dividends. Remember, we said dividend paying permanent whole life? They're earning dividends. Okay. So I want to make sure that we understand that. Okay. So at the end of the year, you have $67,881 in your policy. Okay. So you have that inside the policy. So once again, you put in 75 and yet you have 67,000, which means 91 cents. Now, what do I mean by 91 cents? You have actually recaptured 91 cents of every dollar you've invested inside this thing. Okay. But it gets even better. So now let's go to years 8 through 10 or 8 through 12. Now, here's a cool thing about these kinds of policies. After year 7, you make no more deposits into the bank. So no more $10,000 premium deposits. That's an optional thing, by the way. Okay. No more deposits. Yet here's the thing. In year 8, what do? You go buy another car for $25,000. Okay. And then what do? Same thing. You pay it back at $6,000 per year, $500 per month, next 5 years. So what have you done? Well, you put in $30,000 back in by paying that loan back. But here's the thing. The $67,881 has now grown. So at the end of year 12, it is now worth $91,473. So it's grown at the same time, but you've put in no more deposits. You've paid your loan back. So what does the math show us with this right now? Okay. So once again, you did have $25,000 in cash you took out. You've put in 30, you took 25 out. The net right there, 5,000 less that, $23,592 net. But you only put in $5,000. So let me ask you a very simple question here. Would you like to put $5,000 into something and have $23,592 that you can take out? Would that make sense? Would you want to have that kind of return on your money? So hopefully the answer is yes, because that's a pretty good return right there. You put in 5 and you had 23,000 of growth out of it. Okay. So that's how this can work. So you got your money back plus quite a bit more using infinite banking and being your own bank. Now, by the way, I want you to think about this for a second. Now, this was an example of a car. What if it was cash flow in real estate? What if you took that money and put it into something that actually gives you cash flow? That would completely change all the numbers even more. Okay. It actually make them even more profitable. So this is what is possible when you understand how infinite banking works. Now, there's 3 rules that we talk about with infinite banking. So the first one is pay yourself first. Now, we've been trained to pay all of your bills first, then take whatever's left over and put that into savings. But that's, by the way, that is the wrong way of thinking about money. Paying yourself first means that you put your money into savings first, then you pay everything else. Pay yourself with interest. So if you have to pay the bank back, a traditional bank back with interest for a credit card, for a car loan, for a home, guess what? You should be an honest banker with yourself and pay back your own bank with interest, because you can't recapture interest if you don't deposit it into your bank, by the way, okay? The last one is recycle and recapture your money. Now, let me ask you a question. Would you agree that it's better to pay yourself interest than the bank? So you're going to get a lot more value out of paying yourself interest than the bank, right? Because you're going to have that money in your control. Okay. Now, by the way, if this works for a car, by the way, what else can it work for? So let's look at one of the more popular things that a lot of our clients do, and that is debt. So debt is one of the biggest things that can take wealth away from you. And we are taught to live with debt. That is normal. Oh yeah, you want a car, get a car loan. Hey, you want to have a 4-wheeler, you want to have a motor home, you want to have all these things, go get a loan, go get debt. Well, what we're being trained to do is essentially to give our money and wealth to somebody else, because it's stealing our wealth. So in this example here, this is a doctor, 45 years old. He has 9 third-party debts, 9 of them, okay? $478,774 in debt, okay? Now we're going to do infinite banking and show you how this can recapture debt. And we're going to do $25,000 a year for a policy premium deposit, okay? So the total payment this doctor is making, by the way, is $5,777 per month, or $69,000 per year in payments to these debts, okay? So a lot of money going out. So what we're going to look at here is, if he were to pay all of his debt at $25K per year, by the way, how long would it take him? It's about 19 years. It's a long time, a long time. And so we're going to show you how you can pay all this debt off, only doing $25,000 into the policy per year, and it'll take about 7 years to pay back the debts. Now, that sound impossible? Let's go ahead and show you how it works. All right, so his monthly payment, as I said, is $5,770 per month right now, okay? So we're going to deposit $25,000 premium deposit into our bank. That's going to give us access to $14,863 of cash value in our policy. And by the way, that number oftentimes is quite a bit higher, but we're going to be very conservative on the math on this one. You're going to take that $14,000 out of your policy as a policy loan, and you're going to pay off the Discover card and Lowe's and part of Nordstrom's. What's that going to do? Okay. That's going to reduce the debt down to $463,000. You can see that in the lower left. And your monthly payment is going to decrease by $448. Now, here's what we do though. So we take that $448, because we're an honest banker. Remember, we're an honest banker with ourselves. And we put that into a separate bank account, or we put it back into our policy. You can put it back in. Remember the car payment going back into the policy loan? So you can put it back into a segregated account or back into your policy. Now, what happens is year 2. In year 2, we're going to do another premium deposit of $25,000. Our cash value that's going to be available within the first 30 days, by the way, first 30 days is $16,571. The payments of $448 back to yourself equals $5,374. So how much cash do you have now? $21,945. So what do? We take that $21,000 and we pay off the Nordstrom card, we pay off Wells Fargo credit card and the private loan and part of the BMW. So now our total balance of our debts is down to $378,000. Our monthly payment just decreased to decreased by $1,917. So once again, be the honest banker. Okay. We take that $1,917 and we put it into our policy loan or back into a separate account. Now, here's the thing. The monthly payment hasn't changed for this person. Okay. It hasn't changed. It's still $5,700, but we're paying less to the debts and we're paying more back to ourselves. Okay. Year 3. What does year 3 look like? Now, once again, you're going to put $25,000 into your policy premium deposit. The cash value available is going to be $25,541. Okay. So if you guys didn't catch that right there, you put in 25 and you can take more than 25 out. That is pretty powerful, by the way. It's pretty cool. The payments of $1,917 back to yourself equals $23,004. So the total cash that you have available now is $48,545. So what do? Take that money out and you pay off the BMW, you pay off West Marine and a portion of the condo. Okay. Your debts have now gone down to $283,000 and your monthly payment just went down by $3,677. So can you kind of start to see how this is changing, right? The cash flow is the same, but where's it going? Very important. Okay, so before we get to the next year, I want to show you what's happened right now. So how much did we put in so far in the 3 years? We have put in $75,000, okay? This is very important right here. We put in $75,000. We've taken out loans of $55,000. So let me ask you a question, okay? If we've taken these loans out of $55,000, we put in $75,000, how much do we have in our policy? Earning dividends. So by the way, we earn dividends on these policies. So how much do we have in the policy? A lot of people would say, well, it's going to be $20,000, right? 20,000, 55 out of 75 is 20. Okay. But here's the thing. It's not, it's actually $75,000. We're earning dividends, which right now are around 5% on the total $75,000, even though we have borrowed $55,000 from our bank. So that is very, very, very powerful. You're earning 5% on $75,000, even though you've taken that $55,000 out and put it to work somewhere else. That is very powerful right there. That's powerful. Okay. All right, let's go ahead and get back into it. Okay, so year 4. Year 4, same thing. 25 goes in, cash value is $26,000 available. The payments back to ourselves of $3,677 is $44,000. So the total cash available is $70,000 and change. Now, what do? Take the 70 out, put it towards the condo. Now, what doesn't happen is the monthly payments don't change because the condo and the house are amortized loans. When you pay the principal down, the payments don't change. So it doesn't change the monthly payments. Okay. So let's look at year 5. Now, year 5, same thing. 25 goes in, cash value available within 30 days is $27,000. Payments back to ourselves, once again, is $44,000 and change. Total cash, $71,225. You take that out, pay off the condo, pay off a portion of the house. Monthly payment goes down by $4,556. So here's what happens in year 6. Okay. In year 6, we reduce the amount we're putting towards our first bank policy, our first infinite banking policy. So we only put in $10,000 now. Okay. Even though we put in $10,000, we have cash value growth of $13,000 in that policy. And now we do a second policy because we like this way this is going, right? We like the way this is working. We have some more money. I want to do a second policy. And by the way, you can do those. We do a second one of $25,000. We now have $14,863 in that policy available within 30 days. The payments back to ourselves is $54,678. The total cash available to borrow from our policies and take out is $82,633. And what do? Okay. We pay off the house. Our monthly payments go to 0. And that is the end of year 6. Year 7, what do? Pay back our policy loans. And we are debt-free. And we have cash value that is still in our policy. And we'll show you what this looks like here in a moment. But what I just showed you is a way where you paid a lot of money of debt off. You pay the debt off, but you still have all the money in your policy, in your control, and it's going to have future value for you. That is what infinite banking can do. Now, if that sounded complex, sounded like a lot of numbers, I get it. It is. So I would not recommend going and doing that on your own. So we have what's called a debt mapping specialist, and we have what's called our debt blaster tool. So we have software that will do exactly what I just showed you, and it'll show you how to cash the entire thing. And we have experts on our team that will map it out for you. So you don't have to guess on what I just showed you. If you just looked at the very beginning and said, that's a lot of debt, that's 19 years. At the end of 7 years, you're zero debt. You have all that money that you would have paid to the banks still in your hands, still in your control, and you're debt free in 7 years. If that sounds attractive, we will show you how to do it. Okay. And so we do these things all day long for people because that's pretty powerful when you can recapture that debt back into your hands. Now let's talk about this though. What if I have no debt? What if I have no bad debt, right? Okay. What if I don't need a new car? Because I just showed you a debt example. I showed you a car. Can I still benefit from privatized banking? Better question is, should I still become my own banker? 100% absolutely, because here's the cool thing. This is what's so amazing about infinite banking, guys. When you take care of the debt, if you don't need the car anymore, that's when the fun begins, because now you flip over to let's build a wealth. Let's create that legacy. We've recaptured the debt. We paid that off. We're not giving our money back to the banks anymore. We're paying it to ourselves. Now it becomes fun because now you start to really become the bank for other things like real estate. So here's some things that you can do with infinite banking outside of what I just showed you. Active real estate investors, wholesalers, flippers, buy and hold. If you're doing those things, when you put infinite banking on top of it, it makes it even more powerful. Commercial properties, apartments, mobile homes, mobile home parks, things like that. Private funds, you have access to your own private funds. Maybe you want to do passive real estate, lending, taking your private funds and lending that out onto deals. A lot of business owners, by the way. So we have a lot of business owners that have partners. Maybe they want to have a line of credit in their business. They want to use infinite banking inside their business. Very, very powerful. They may even have employees and they want to do infinite banking for all the employees. Can get very, very fun when you're doing that kind of stuff. If you want to do trading, stocks, options, things like that, you can use infinite banking. Let's say you want to do a startup. We have a lot of people that want to start a business. They have cash. They'll use infinite banking first so they don't lose the value of that money. They keep control of it, but they still have the business as well. And then another fun one is equipment flipping. And if you're saying, what the heck is equipment flipping? Well, we have opportunities like this inside of our private groups where you can do equipment flipping. So lots of different things like that. Okay. Now, I'm not going to go through all of the numbers on this slide. This is one that I think Stephen has the full slide on it, but I want to point out a couple of things on this slide, some numbers on this slide. Now, this is an example of using private banking for private money lending. Now, here's the thing. So this is year 8. So by the way, let's say you have a policy. This is year 8. Okay. You put in $48,593, that's the red line on the left, into your policy. Okay. Your cash value that you can leverage or borrow against in the policy grew by $66,722. So that's an $18,000 of growth. That's $18,129 of growth, or a 37% cash on cash return. So put a 1 in the chat box if you guys would like to have that kind of cash on cash return. A 37% cash on cash return. Does that sound good? Give me a 1, a Y, a yes, or whatever in the chat box. That's a pretty good return. But it gets even better. It gets even better. Okay. So let's say that you are going to private lend that money back out. Okay. So let's say you do it at 12%. Okay. So 12%, you lend that money out. You're already earning 37%. You're paying yourself back, your bank, 5%. So you made 44% on that money. Cash on cash return of 44%. And guess what? We did nothing different except where your money goes first. Where it went first is extremely important, okay? So would you rather make 12% by private lending or do infinite banking and private lending and make 44%? So I want you to take a quick second and just understand what I just said. How do the wealthy get wealthier? How do they stay wealthy? How do they keep building so much more wealth compared to the average person? Because they don't make just 12%. they make 44%. And you can do the same thing. That is how you start to build wealth. Because I have met a lot of people, private lending. They like making 12%. They like making 15%. But then I say, well, wait a second. Why would you like to make 44%? Their minds kind of just like melt because they're saying that, how is that possible? And then you show them this. All of a sudden, it's like, holy cow. Like, this is ridiculous. This is what the wealthy, what the 5%, by the way, those 5% at the beginning we talked about, this is what they're doing. Stuff like this, okay? All right. Now, on this one, this one's an interesting one. And this is the power of uninterrupted compound interest. Compound interest is very, very powerful. So I'm not going to go through all the numbers, all the math. I just want to point out some different things on this slide right here. So look at the left-hand side. You'll see the year of the policy, 2, 5, 10, 15, 20, 25, 30. So 30 years of a policy in place. You'll see the deposits, $5,895. You have some guaranteed cash values, etc. But what I want you to look at is on the right-hand side, those two columns. Look at the cash on cash return year 2, 21%. That's awesome. That's great. That's, by the way, that is not lending to yourself and investing. It's just what you're earning in the policy. That's just what you're earning, cash on cash return. Then it's 26%, 54, 115, 191, all the way up to 386%. That's pretty powerful right there. Access to capital in year 2, 121%, 126, 154, 215, 291. The amount that you're able to access is more than what you even put into your own bank. So if you think of it that way, wait a second, I can borrow more than I put in at a certain point in the policy. How fast can you build your wealth? Probably a lot quicker than other traditional strategies, by the way. It's very fast. So I just want you to understand that these percentages are what you can do inside infinite banking policies when they are structured correctly and set up the right way, by the way, okay? Now let's talk about the Millionaire. So this is always a funny one. And there's a picture I saw one time I thought was pretty funny about this, but it was how do you eat an elephant, right? Okay. Well, it's one bite at a time. Like that's really how you do it. And so what I just showed you, those types of returns is that right there. Okay. It's that right there. One bite at a time. Okay. And this other one I like here, there's this quote, like I think Chris put it in here. It's called "The man at the top of the mountain didn't fall there." And why do I like that one? It's because when you see somebody at the top of the mountain, we're saying, oh my gosh, I want to be there too. But you have to be willing to take that first step and climb the mountain. You got to take that first bite to eat that elephant if you want to get to the top, if that makes sense. Okay. And this is a pretty fun quote here. Is it possible to owe no man nothing? Well, yeah. So the machine, what we just talked about, it works for debt and expenses. It works for vacations. It works for homes. It works for taxes, by the way. Everything. It works, okay? Now, what I want to show you right now is if we continue to pay the homes back that we showed in the person that had the debt, they paid it off, that example. I want to show you what it would look like if we had paid the homes back as promised, okay? The condo and the house. Well, here's the math, okay? $879 for 251 months is $220,000. That's money that you no longer have, by the way. It's gone. It's out, not in your control anymore. Okay. It's, by the way, it's in the condo. So if you want to sell the condo, there you go. But it's not, you don't have that cash for you. The house, $1,221 for 224 months. That's $273,000. Once again, out. That's $493,000 paid to the banks. By using the money multiplier method, you're going to have that money in your own pocket, your own bank, by the way, versus the bank, the traditional bank. But here's the fun thing. It gets even better. Let's just say you're earning 4%. By the way, it's more than that, but I'm just going to say you're going to earn 4% on that money inside your policy, inside your infinite banking policy. So how much do you have now down the road? Okay. $749,000 in your policy, plus you have the house and the condo. So think about that for a second. Would you rather pay $493,000 and have zero cash left, or have $750,000 of cash value in your policy that's going to be passed on, by the way, to the next generation as well? Or you can use this for investing in real estate. Which option sounds better? I know it's kind of a funny question, but obviously everybody wants to have the $750,000. That's how you truly flip everything around. That's how you could change your lives, by the way. Okay. Now, now that you know what we just showed you, let me ask you a question. Should you do this? Should everybody be doing this? Well, I believe the answer is yes. If you can do this, yes, I would recommend strongly, because if you don't do this, if you just continue the same path, getting into more debt, paying more interest, you're stealing from your children, your grandchildren, you're stealing from that next generation. That's really what's happening. But here's the thing. It doesn't matter if you make $10 per hour or $10,000 per hour. It doesn't matter. This can work for pretty much anybody. Yes, there are qualifications, which we'll get into in a moment, but this can work for you. By the way, wealthy people do this for a reason, because they know what it can do. And I'm going to share with you some of the things that this can do beyond what I've just showed you. The Rockefellers, Rothschilds, Morgans, the Stanleys, the Barclays, they all understand how to keep money in their families. Because here's the thing, and this is me kind of talking from my heart. Everybody needs to break the bonds that we have, which is called financial slavery. You've got to break those bonds. If you don't, you're going to continue to be stuck. You're going to continue to be in debt, not having the success or the generational wealth that you want. Because here's the thing, when you do this, you're setting up not just yourself, but you're taking care of those around you as well. Like, you're truly taking care of the people around you. Okay? Because this is the way I look at it. Do you want to work for your money, or have your money working for you? So when you use infinite banking, like we show you, like we help you do, you're going to make that money go work for you. Okay? Because if you're constantly trading time for money and not doing anything else, it's vicious. It's going to be a cycle, and it's hard to get ahead. It's hard to actually have any wealth, because the money is not working for you. You're working for the money. So infinite banking is about controlling your money. Okay? It's also about getting that money working for you, so you can stop working so hard for your money. Now, by the way, let's talk about the other benefits of infinite banking. Now, we did mention the death benefit a little bit. The death benefit is a guaranteed payout, tax-free, by the way. It's not a question of if it'll be paid out. It's a matter of just when. And it's that's generational wealth right there. And it exists with these policies day one. Okay, the loans. When you borrow from your policy, you control the loans. Is there a monthly minimum payment? No. Is there a maximum? No. Do you have to pay it every month? No. It's up to you. Now, we do recommend being a responsible banker, pay back your loans with interest. But let's say you're borrowing the money for 6 months to go do a real estate deal. That real estate deal has no cash flow until it's done. Well, guess what? Don't pay back the monthly payment on your loan. Just don't pay anything on it. Mirror the investment. When it pays out, pay your loan back. Okay? You control the loan. Okay? The internal values grow tax-free, by the way, inside the policies. Those dividends, tax-free. I like paying taxes, not really, but I don't mind, but I love paying a lot less. And I also love tax-free. Okay? The policies are exempt from judgments and liens in most states. Gee, I wonder why wealthy people want to put their money into these policies. I wonder why the banks do it as well. It's a protected asset, meaning that bankruptcies, court orders, divorces, creditors can't go after it in most states, by the way. Okay. Additionally, tax-free income in retirement. You can set these things up to have tax-free income later on in life. That's pretty awesome. Okay. Now, one last thing I want to mention about the loans as well. Now, the loans are, by the way, a guarantee. If you have cash value in your policy, you can borrow money. There is no credit check. They're not gonna say, hey, what's your current income? Nothing. There's no qualifications. If you have cash value available, you can loan that to yourself. Okay? I want to make sure you note that. Now, the fun thing about this that a lot of people don't talk about is that it's an always increasing generational wealth strategy. Now, what do I mean by that? Look at this policy here. Okay? On the right-hand side, you'll see right there the death benefit. 325 year one, year two, it's 364, year three, 403, et cetera, to the point at year 7, it is $500,000. So it's an ever increasing generational wealth strategy. That's pretty cool right there. So the longer you have these in place, the more generational wealth that you're creating, the more security you have for those loved ones, right? That's pretty powerful. Yeah, you can pay interest only on your loans. Yeah, so by the way, a lot of people do that. They do pay interest only on their loans. And then when the investment pays out, then they pay off the loan balance. Yeah. Good note right there. All right, let's talk about the policy loans. Now, I already mentioned some of these things, but this is something that a lot of people, when they've heard about infinite banking, they don't hear these kinds of things. So the policy loans are guaranteed, as I said, okay, they're guaranteed. There's no credit check, there's no approval. Ask and you shall receive. Pretty awesome, okay? The loans are private. This is a very powerful one. So the loans are private. They do not go on your credit report. So why is that an important thing right there? Well, let's say you want to qualify for a HELOC, a first position HELOC, a mortgage, something like that, another loan or something, but your debt to income ratio is too high. Let's say you have $100,000 income and you have $50,000 of debt, okay? Maybe you have some cash, you don't want to pay it into the loans because you don't want to lose the cash value for yourself. What you can do is move the debts into your own banking policy, which removes them from your credit report. Now, all of a sudden, guess what you can do? Qualify for a HELOC, qualify for a mortgage, qualify for maybe it's a portfolio loan for real estate. There are so many ways to make infinite banking be beneficial and powerful for you. This is just the tip of the iceberg, by the way. There are no maximum payments. You are the one in control. Remember at the beginning, we talked about in control. You are in control, okay? Miss a payment on your car note that you bought with your policy loan. Guess what? Who's going to come and talk to you about that? Well, go look in a mirror, by the way. It's going to be you because you are in control. If you have cash flow is different this month, I don't want to make my payment back to my policy for my car note, don't pay it. No one's going to come take your car, by the way. If you have a car loan with a bank or a car company, you miss a couple payments, your car is going to get taken away. Not the same situation with your own bank, by the way, because you are the bank, okay? Next up, I want to talk about how can I fund my bank? Fund my bank. Okay, I misspelled that up there. All right, so you can do it monthly, you can do it quarterly, you can do it annually. It's up to you, and you can change that, by the way, during the life of the policy, so you can do them that way. What's the minimum you would want to put towards an infinite banking policy? This is a very common question, so I want to make sure that we address it. So it's 10 times your age per month up to age like 60, 65. So it's 10 times your age per month. If you're 50, $500 per month is the minimum, by the way, just the minimum. The maximum, by the way, is going to be dependent upon the individual. So if you make, a certain amount of money, it's going to be a percentage of that can go towards the policy deposits, the premium deposits, okay? And we'll go through those numbers with you. On top of premium deposits, so let's say you're doing $100 or $1,000 per month, okay? $1,000 per month. A common question we get is, well, hey, Brian, I love doing 1,000 per month, but I have $50,000 of cash sitting over here in the bank losing value. Can I put that into the policy as well? Yes, you can. Yes, you can. So a lot of even people that understand infinite banking don't understand what I just said. So yes, you can. You can fund these upfront. We call that a dump in. A very large amount can go in upfront and really jumpstart the policy. But the cool thing is that you can get access to 50 to 90% of the deposit premiums within the first 30 days. So it's very quick. We call these high early cash value policies. These allows you to become the bank very, very fast and do things very quickly, okay? And last, let me ask you a question. Would you put $1 in order to get $3 out? If I showed you an ATM machine where you could put in $1 and pull out 3, would you put in the dollar? I mean, put in 1 or a Y or a yes in the chat box if you would do that. Would you put in $1 to get $3 out? I know I would, and we do, by the way. We all do this because everybody here at the Money Multiplier, we do this concept. So would you guys want to put in $1 to get $3 out? Yeah, yes, there you go, Kevin. There you go, Deb. Yeah, exactly. Okay. So if you don't want to do that, by the way, I think you might want to go see a psychiatrist because that would be crazy. Because if you don't want to do that, but that's what you can do with these policies. The longer they are in effect, the more you can do that. Okay. It's very, very cool when you see that the math work. Now, I'm going to show you this right here. So I want to show you this example right here. This is a policy here, but on this one, $60,000 goes in, $55,000 of cash value available, okay, at the end of the first year. That's how this can work, okay? That's why this is so powerful. So this person put in 60, can take $55,000 out, okay? Year 2, put in 10, take $10,600 out. Year 11, put in 3,000, take $10,590 out. You guys doing the math there? Is that a pretty good return on your money, cash on cash return? Absolutely, right? Absolutely. All right. So I love this quote by Warren Buffett that we put in here. And it just says this: if poor people would just do what rich people do, they wouldn't be poor anymore. Is that quote true? To a point, yes, it is. There are some caveats that I have personally to it, but it's kind of a cool one, because if you look at the mindset, if you look at what we do with our money, and you look at how a poor person versus a wealthy person handles their money, it's very different. It is very different. Some stuff about me. So I get this question sometimes. People will ask me, well, Brian, why should I work with you? So I've been teaching IBC for now it's about 10 years now. Been doing this for quite some time. We have an entire team here. So we have an entire team here at the Money Multiplier that works with you to set up IBC. If you go to a lot of other people, they might have one person, two people. We have a full team. That allows us to do a lot of unique things that other people can't. We have specialists for a lot of different things. So we have a full team that will back you, okay? We are one of the largest producers of infinite banking in the US. Why though? Why are we one of the largest? Because we have a lot of repeat clients and referrals, right? Because we treat our clients the right way, by the way. Right now, I have 100 in underwriting. I think we have a lot in underwriting right now. I'm not quite sure how many it is right now, but we have a lot of policies in underwriting right now. But that also shows what we can do, because we have dedicated underwriters at insurance companies that work just with our clients. So that's pretty cool. Also, what we do here at the Money Multiplier is we have ongoing support and services. So this is one of the things that happens quite a bit with me and clients and this happened yesterday, by the way. Somebody came in and said, hey, Brian, I've got these couple policies. I think they're infinite banking. When I hear that, it's like alarm bells going off. I'm like, what do you mean you think? She goes, well, this person set them up for me, but they didn't really know how to tell me how to use them. And I go, and so she showed me the policies, $80,000 of cash value, and she had never used the policies for infinite banking. I was just like, ooh, ouch. So she had missed out on a lot of opportunities because the person that put this in place for her didn't use the concept themselves and did not know how to tell this person or educate them on how to use it. So one of the things that we do ongoing, we're doing this presentation right now, by the way, we do these every week, we do other ones as well, is we have ongoing support, okay? And we do these things at no cost to you. There's no cost that we're gonna charge you for these things. There's no fees, nothing like that, by the way. So that's another big common question we get. But yeah, so we do this at the Money Multiplier because we treat our clients right, but we also want you to be a honest banker. How do we do that? We give you knowledge, okay? We give you knowledge. Now I'm gonna cover this real quick, just because it gets a lot of attention. Is an IUL or VUL infinite banking? The short answer is this: no. IUL and term insurance pay some of the highest commissions, by the way. We take a 70% cut in commissions to do infinite banking, by the way. So we give commissions so that you get cash value, okay? And we only do infinite banking. We don't do car insurance or home insurance or health insurance. We do infinite banking only, okay? All right, so one thing that'll happen to us is we're gonna live. The second thing is we're gonna die. So let me ask you a question. With what you just saw here, are we better off with or without infinite banking when we're alive? Well, we're better with it because it has living benefits. We die. That happens, okay? Are we better off with or without it? Generational wealth, guaranteed. We're better with it. Now, let me tell you a story. This is kind of a funny slide that I like. So let me tell you a funny story about the tale of two people. So wealth is always being transferred, by the way, especially when there's lots of things going on. But when it comes to things like infinite banking, I see kind of two different groups of people. The first one is, I don't need to do anything different. These are kind of the people that their mindset is very stuck on that traditional path, trading time for money, saving money. They've heard some things about infinite banking. Oh, no, that's not real. That's not true, etc. Okay. Here's the thing. Guess which group wealth is taken from? It's taken from this group, by the way, in most cases. Then there's group two. Group two is the one that, guess what? This makes sense. I want to do something different. I know that there's knowledge out there that I need to go get, and I want to be on the winning side of wealth. When wealth is transferred, I want to be on the winning side. And so I always ask people, which group do you want to be in, group one or group two? So by the way, group two is the 5%. We talked about that at the beginning. Group two is that 5% of people out there. So if you want to be in group two, put a 2 in the chat box, because group two is the one that are going to take action. They're going to learn about something. When they hear infinite banking, they hear the presentation, they are going to learn about it. They're going to take that next step and say, hey, this is worth investigating. Okay. This is worth learning more about it. Okay. Once again, group one, go it alone. And I wish I had the little the GIF where the guy's beating his head against the wall, because that's sometimes what I feel like when I think back to where I used to be. I'm beating my head against the wall. Group two is very simple, right? Here it is. Hop on a call. Let's solve your problems. Let's answer your questions. That's all we're going to do on the call, by the way. Let's see if infinite banking is a fit for you. That's really all we're going to do, because we all have challenges. We all have things in life that we want to solve, right? Let's see how infinite banking can solve those for you. And if you have questions, let's dive into them. Okay, let's dive into those questions, because obviously I cannot answer everything or give you everything in 90 minutes. So let's hop on a quick call, go through those things, and help you out. Okay. Yeah, Lisa. Yeah, too. Exactly, Brenda. Appreciate that. So guys, yeah, so the link's right there, Brian, betheyownbanker.com or beyourownbanker.com. I think they put it in the chat box too. That's my personal link, by the way. You'll talk with me personally. And I'm going to end the presentation on this slide right here, because I love this quote, by the way. The problem in America isn't so much what people don't know, it's what people think they know that just ain't so. So, yeah, if you have anything you guys want to chat with me about, obviously schedule a call. And then if you have any questions right now, we'll take a few minutes and answer questions. Otherwise, I appreciate all the response. I appreciate the interaction, guys, and your time as well. I think I see a lot of questions were answered in the question box already. So
Yeah, good stuff, Brian. If anybody does have any questions, just throw them in the Q&A. But what I'd highly recommend is just get a call scheduled with Brian and talk through it. I mean, there's no cost or anything like that. I mean, we provide all these services being licensed agents, and just like any other agent, we get paid that way. So we're able to provide consultation strategies, all the tools, hold your hand through the entire process, support you afterwards for years to come. And, we don't charge a dime for any of that stuff. I believe we're the only company in the country that does infinite banking this way, with the ongoing support and everything free of charge, where we don't sell memberships or any upsells or anything like that. So just know you're connecting with us, and we're not going to ask you for a credit card or try to sell you anything. We're just going to answer any questions about how this looks for you and your family, and what it could potentially do for you, show you what that looks like using the tools that we've created, and support you if you decide to make that decision to move forward. But no harm, no foul there. So definitely get a call scheduled. I know some of the questions on here can get a little personal, so you might be scared to ask them that way, but get on the phone, and that's what it's all about.
Yep, absolutely. Yeah, thanks, Brendan. Appreciate that. Thanks, Deb. Yeah, guys. Yeah, grab that link. Grab a time with me. Love to kind of go through any questions you guys have about it. Yeah, you're right, Stephen. It does. The questions can get a little personal, but here's the cool thing. So, a lot of people say, well, what if I can't qualify? What if maybe I have a health issue or something? These are very versatile. So you can do policies on other people and you can own them. Like that happens all the time. Like I have that conversation daily, by the way. So it's very versatile. Another kind of thing that people ask about is, well, do I have to pay, $1,000 per month or 500 or 100 or whatever it is for the rest of my life? The answer is no, you don't. In fact, with these, the premium deposits eventually go down because the policies that get so efficient, they just take off and keep growing by themselves. You don't have to keep putting money into it, but you can if you want to, and we oftentimes recommend doing that. But once again, they are versatile when it comes to the premium payments or deposits. So keep that in mind. Let's see here. Someone said, I know, and then people ask about, can you use funds from qualified retirement plans, 401ks? Yeah, we can get into that on a one-on-one call. I can answer those kind of questions, of course, 100%. All right, guys. Any other questions you guys got?
Well, man, that was great, Brian. Thank you for sharing how this works.
Yeah, absolutely. And any feedback on the presentation, yeah, feel free to let me know, because we're always improving these presentations, by the way, too, and always working on them and tuning them for future calls and future presentations. So yeah, any input, any thing you like to think should be more clear on these, yeah, let me know. Always appreciate any feedback.
Yeah, we do put the recording of this on the Chris Naugle YouTube channel. So it's YouTube at the Chris Naugle. If you go to playlists, there's one that says Take Back Control Tuesdays, and it'll be placed on there so you can watch that. And then there's other presentations on there as well, but you can find it right there. And then I did put that direct link to the playlist over in the chat box also.
Awesome.
All right, cool. All right, Brian. Well, thanks for your time. Appreciate everybody coming on today. We'll be back here next Tuesday, of course. Every Wednesday, we have 3 different shows we do. We start out in the morning at 9:30 a.m. Eastern with What the F Happened, which live streams on that same YouTube channel, as well as on our social media channels, Facebook and Instagram. So follow Chris or myself, and you can see that there. We do Wealth Webinar Wednesday, every Wednesday at 1 p.m. Eastern, where we get into other financial education topics and different investment opportunities, things of that nature, different strategies. So definitely hop on Wednesdays. And then every Wednesday at 4:30 Eastern, we do Ask Me Anything, which is our entire team on a live stream that's also on YouTube and social media. And we just spend an hour kind of having fun, answering questions, talking different opinions and strategies and things of that nature. So join us on Wednesdays for that. And of course, we got Private Money Club shows every Monday and Thursday at 1 p.m. Eastern also. So you guys can check that stuff out. Just send me an email if you need any of those links. But we appreciate everybody being here. Oh, what's up, Jimmy? So love the content, would appreciate more time spent on not paying back your loans, or at least the interest, and how the compounding of that will work against you. Yeah, definitely, Jimmy. I mean, we always want to teach, paying back the loan is something you need to be doing. It's being an honest banker. It's part of the concept. You are in control. So if you need to be flexible with that, you can as the banker, but definitely something we always want to be doing is being responsible, being disciplined, and following the system the right way. Absolutely.
Yeah. And also to answer that too as well, it depends on where your money's at. So when you borrow from your policy and take the money out and put it somewhere, where that money's at outside the policy is going to be important when it comes to the policy loan. So like, let's say your money's making money for you. It's always in motion. Well, keep it in motion, keep it making money. But we recommend typically, if that's the situation, take a portion of the proceeds or profits that you're making on your money and pay back the policy interest only. So it doesn't compound on top of itself after, on a yearly basis. But yeah, money in motion makes money. So if it's doing that, keep it out there, keep it moving. Yeah. So yeah, but if there's any specifics about that, and definitely would love to chat with you about it.
Yeah, Lisa, sorry about Monday. So what happened is Zoom lets you do like 25 instances, and it expired last week. We didn't realize it, so no Zoom reminder went out this week. But we didn't update that. Just to give you a heads up, though, Monday's Memorial Day, so we won't have Money Club. But June 3rd, we'll start it back up every single week again. So you should get those reminders since we did update that Zoom link now. But sorry about that, Lisa. The replay will be put on the Private Money Club YouTube channel from this past Monday tomorrow. So you can see that on YouTube at Private Money Club. All right, cool. All right, thanks, Brian. Have a great day. Thank you, everybody. We'll see you soon. Have a good one.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.